Okay, so let's start with a super quick revision of the next chapter, that is refunds, one of the most important chapters under GST. Simple hai. Okay, nothing to worry. We will do a super awesome revision of this chapter, with which you'll be able to get a good hold over this. Now let's start with it, everyone. Refunds chapter, section number 54 to section number 58 of the CGST Act, and correspondingly we are going to take up some rules from the CGST rules also, and one section, that is section number 15 from the IGST Act relating to tourist taking refund of taxes, etc., that we are going to take up in this particular chapter. Yes. Now here, first of all, one definition that we have to consider here is about refund. Okay, now refund, the thing that we are studying in this particular chapter, that is refund includes what? Okay, so if suppose if you have done any zero rated, okay, and now since you have done the previous chapter, you should know the meaning of zero rated. Normal physical exports or normal exports done outside the country, or any supply done to SEZ unit or developer for authorized operation, this gets covered under your zero rated supply. So if we have done this supply by paying any outward tax on it, okay, then in such case you will get a refund of that. Or suppose if there is any input tax credit on such zero rated supply, you will get a refund of that. Okay, or suppose if you have done any, you have paid any tax on supply of goods which was considered as deemed supply, you will get a refund of that. Deemed supply, do you recollect that? Deemed exports, any supply which we have done against the other person's advance authorization, against EPCG, or any supply done to an export oriented unit, or any specific supply done of gold by bank or PSU, that was considered as, even if we have sold it in India only, then too that was considered as deemed export. So any tax paid on such supply will also be coming under refunds. And refund of unutilized ITC, suppose unutilized ITC, which we will study specifically under section 54(3), which says that if you have done any zero rated supply, or if there is any inverted tax structure, okay, on which the sale, suppose if you have done any zero rated supply without payment of IGST, then you will be having some unutilized ITC with you. Similarly, if you have done any inverted duty supply, then you will be having accumulated ITC with you. Refund of that will also be available in this particular point, right? Okay, now going on to the next section, very important section, which is going to be the major part of the chapter, that is section number 54. In that, A part, okay, A part is going to talk about the circumstances in which refund claims is available to you. Okay, first of all, if you have done any zero rated supply on which you have paid the outward IGST, so that outward IGST and the input credit on that will be allowed as refund to you. Okay, that is one point. But this is on payment of IGST. Okay, next one is refund of unutilized IGST, that is when you have done any export or when you have done any supply to SEZ, that is zero rated basically. Okay, if you have done any zero rated supply without payment of IGST, so you will be having something on your debit side, something in your input tax credit, okay, that amount, or inverted duty structure, which we are going to study specifically in section 54(3). That ITC is also available. Difference between first point, second point: in the first point, zero rated was there with payment of outward tax. In second point, zero rated supply was done without payment of outward tax. Okay, next, third one, any tax paid on deemed exports. For that also you can claim the refund. If there is any balance available in the electronic cash ledger, that is just like my account, I have put the money from my pocket. Okay, that is not my input tax credit. So any amount which is kept in electronic cash ledger, I can get the refund of that also. Okay, or any such, suppose if you have collected any advance from the other person, okay, for which you have not issued any invoice till now. Okay, advance money was received, but later advance money you had taken, on which you have paid the taxes to the government, later you could not give that supply, or later you could not complete that particular supply either wholly or partially, then in that case now now you'll have to refund back the amount to your customer. Okay, so in that case, whatever tax you have paid to the government, we can take a refund of the same, right? Next one, under section, this is relating to section number 77. Reference is going to come many a times. Okay, suppose if you have collected any taxes under wrong head, means instead of interstate supply you have considered as intrastate or vice versa, and if you have taken any If you have collected any tax under wrong head and paid it to the government also, then now government has already told you, we have studied it before also, please pay the taxes under correct head, we will not charge any interest from you, and then take the refund of the tax which was wrongly paid earlier. So that was given here. Then next one, any tourist who is purchasing any goods from India is required to pay IGST, means we will collect IGST from him and pay it to the government. So this burden of IGST is on that tourist. So when he is leaving India, he can claim a refund of the same. Then if suppose any order, judgment, decree, anything has been passed by adjudicating authority, appellate tribunal, court under GST, and that order says that you are eligible for refund, then we can take a refund of the same. Okay, similarly, when provisional assessment, suppose if provisional assessment was going against you, you were required to pay some tax during the provisional assessment, but later when final assessment happened, at that time tax became refundable to you, then in that case you will file the refund claim now, and that refund amount will be eligible for you. Okay, then suppose if we have done any supplies to United Nations, embassies, foreign consulates, etc. So the tax burden has been borne by such agencies. Okay, so they can take a refund of the same. Then in case of CTP and NRTP, do you recollect at the time of registration they were required to pay some estimated advance tax? Yes, advance tax under GST they were required to pay. So now when their business is over and now when they are filing their last return, closing everything, at that time if there is any tax payable, okay, if there is any tax payable, they are eligible to get a refund of the same. And last one is a miscellaneous point, that is refund of excess payment of taxes. Any refund of excess payment of taxes. One simple example which I can give it to you is, let's say from the students I have collected GST at the rate of 18%, but I have paid 28% to the government. Okay, but I have paid 28% to the government, means there is no problem between me and the customer, but I have paid more to the government. I can take a refund of the same. Okay, and then later we will also study a few circulars where they are relating it to this point. That is when you had paid some tax to the government on advance payment and invoice was also issued for that. Okay, invoice was also issued to the customer for that particular supply, but you could not give the supply. Then in that case, if you could not give the supply, then now you can give a credit note, okay, to that particular customer, and you can utilize that credit note for payment of your output tax liability. But suppose if you are not able to utilize that credit note against any output tax liability, then you can take the refund of the same under this particular head. Okay, these are some of the cases which can lead to refunds. Okay, this was coming under the A point. Okay, whatever we are doing is coming under section number 54 and under the third point in our book. Okay, fourth point is going to come at a very later stage. Okay, 3A is completed. Now let's go to 3B. 3B is just a procedural thing where they say that except when the refund application is filed by United Nations or embassies or foreign consulates, etc., whenever any other person is filing the refund application, they have to submit. Okay, even if it is from electronic credit ledger of unutilized ITC or if it is from the electronic cash ledger. At that time that person will have to file a form under form called as form GST RFD 01 electronically on the GST portal, and then it can claim a refund from the same. And then for filing the refund application, Aadhaar authentication is mandatory. But when we are claiming any refund on goods exported outside India, okay, on export of goods outside India, at that time no need to file this form, because filing of shipping bill itself will be considered as your refund application. Okay, and one clarification which was put up here is, suppose if your TDS has been deducted or your TCS has been collected, okay, then when that has been deducted or collected and paid by the other person to the government, after that it is reflected in our electronic cash ledger. Okay, so they are telling that you can take a refund of that also. Okay, that TDS TCS also, because it has come in your electronic cash ledger. It is not necessary to use that amount for payment of your output tax liability. Okay, then three special pointers which are coming up here is first point is talking in case of deemed exports. Okay, when we are doing any supplies as deemed exports, we are doing in India only, but that was considered as deemed exports. We had studied for this in the previous chapter that for this the refund can be claimed by the supplier or the refund can be claimed by the recipient. Either of them can claim. If the supplier wants to claim the refund, he will have to take a declaration from the recipient that recipient will not take the ITC of the same and he will not claim the refund of the same. So in that case, the refund will be given to the supplier. Okay, when will supplier take the refund? When supplier has paid the taxes from his pocket and not given the burden to the recipient. Okay, now in this case, okay, suppose supplier, if he takes the refund, that is one thing. What if the recipient takes the refund? Okay, if recipient wants to take the refund, then there was a practical difficulty that they were facing is, if recipient wants to take the refund, then first the recipient should avail that ITC. Okay, when will recipient take the refund? When the burden came on the recipient. Okay, when the burden came on that EOU, for example. Then in that case, if EOU has paid the taxes to the supplier, then EOU will take the credit of the same. So for taking the refund of that particular ITC, first it will have to avail the input tax credit. Okay, means first credit that amount to the electronic credit ledger and then take the refund from the same. And this, why are we availing the credit of this? We are just availing it because there was a problem on the GST common portal. You have to, before taking the refund of that credit, you will have to first credit it. First you will have to avail that amount. So this, whatever you are availing, whatever input tax credit you are availing, this is not your normal ITC. We are just availing it because we want to take a refund of the same. So therefore, when you are doing ITC reversals under rule number 4344, at that time, please don't calculate or please don't consider this in the amount of ITC availed. Okay, that is one point. Second special point which is coming up here is, whenever we are doing any supplies to SEZ unit or SEZ developer, do you recollect a point that it will be considered as zero rated only when the SEZ is using it for authorized operation? Yes, so the refund application will be filed by the supplier only, but only when it has been endorsed by the specified officer of that zone that yes, SEZ is going to use this goods or services only for authorized operations. Then only you can go and file the refund application. And the third one is your CTP and NRTP, which I have already discussed, that whenever any advance tax has been paid by CTP or NRTP, they can take the refund of the same at the time of filing their last return. Yes. Okay, then next point which is coming up here is, what is the time limit? Okay, what is the time limit within which the refund claim can be filed? So refund claim has to be filed within a time period of 2 years from a relevant date. We will see what is this relevant date. But when you are claiming any refund from your electronic cash ledger, that belongs to you only. So time limit of 2 years is not applicable. Are you clear with this? Okay, then there is something called as deficiency memo, which we will take it later when it is going to come. Now, in normal cases, refund application is to be filed within a time period of 2 years from this relevant date. Now, what is this relevant date? So, in case of export of goods outside India, okay, only goods, export of goods outside India, then in that case you are eligible to get the refund. What is the time period for filing this refund application? When it is exported by sea or air. Okay, sea or air. Then in such case, the day when the ship or aircraft leaves India. Okay, when it is exported by land, when the goods pass the frontiers of India, land frontier of India. And when the goods are exported by post, then the day when the goods are dispatched by the post office. From this particular day, within 2 years, you can file the refund application. In case of deemed export, okay, in case of deemed export, the refund can be taken by the supplier or by the recipient, whoever takes. That relevant date remains the same. That is the actual date of filing the return by the supplier. Can we say supplier would have shown in his outward supply? Okay, the supplier would have either collected the tax from the recipient or he would have paid from his own pocket, but at least he would have shown as his supplies. So in whichever return, okay, in whichever return he has shown it as his supplies, the date of filing that return from that day within a time period of 2 years. Okay, here it is actual date of filing. Later we will say due date for filing the return is going to be coming. Okay, then after that, the next one, zero rated supply of goods or services to zero rated means normal exports or supply to SEZ developer or unit. In that case, okay, in that case, the due date for furnishing the return means whenever we have shown it as a supply in whichever return, whatever was the due date of filing that return, from that day within a time period of 2 years, right? Then the next one, when the services are exported outside India, okay, here it is specifically talking about services. In the first point, we were talking about goods exported outside India. Here we are talking about services exported outside India. So, either the receipt of payment, okay, because in case of services, receipt of payment is very, very important. So, receipt of payment or supply of services, whichever is later. Okay, whichever is later. And in case the payment was received in advance but the invoice was issued late, so again whichever is later, that is date of issue of invoice. From this date 2 years will be calculated. Then suppose if the refund has become payable to you because of the order of any court, tribunal, etc. So whenever that order was communicated to you, from that day within a time period of 2 years. Then if the refund is becoming applicable to you on account of inverted duty structure, okay, input is at higher rate, output is at lower rate, then in such cases again, whenever you had shown this, whenever the refund became applicable for that particular supply, and in whichever return you have shown it from the due date of furnishing such a return within 2 years. Okay, when the tax is paid provisionally and later due to final assessment, refund has become applicable to you. So the date of adjustment of tax, the date when they are doing that final assessment and the tax has been adjusted and now it is being refunded to you. So from that day within 2 years. Next one, in case of a person other than a supplier, example, if a consumer is going and taking a refund directly from the government, then in such cases, the date when the consumer has received the goods or services. Okay, and last one, any other case, whenever the tax was paid to the government, from that day within 2 years, you can go and file the refund application. So this is the relevant date. This is the relevant date within which you have to go and file the from a year, within 2 years you have to go and file the refund application. And then there comes a clarification that whenever you're going and filing a refund application, refund of multiple tax periods of multiple years, okay, of multiple years also can be clubbed in a refund application and you can go and file it together. Okay, then what are the documents which are required for filing the refund claim? So here they are telling that big documents are not required, means you are not required to go and submit the copy of invoices and all that, but just a statement which justifies that okay, you are the person who is eligible to that refund, and a certificate that there is no unjust enrichment, means you are claiming the refund because you have borne the burden of that tax and you have not passed it on to someone else, means there is no concept of unjust enrichment applicable. This declaration, okay, one is your documentary evidence and second one is this declaration, you have to submit it along with the RFD 01 form, that this is the form and please accept it and please grant us the refund. Okay, but they say that if the refund amount is less than 2 lakhs, okay, then if the refund amount is less than 2 lakhs, then in such cases this declaration of unjust enrichment not becoming applicable is no more valid. Okay, but when the refund amount is more, then in that case, if the refund amount is more, then in that case a declaration from CA or a cost accountant, okay, a declaration from a CA or a cost accountant is required in such a case, that there is no concept of unjust enrichment that is applicable. So to conclude, if the refund amount is less than 2 lakhs, okay, then CA certificate etc. is not required, just a self declaration is sufficient. If the refund amount is more, then in such cases certificate from a CA or a cost accountant is required to be attached along with the refund application. Okay, but when an unregistered person, consumer is going and taking the refund, irrespective of the amount of refund, CA certificate, cost accountant certificate is not required. And yes, then in 6 cases, there are these 6 cases where no certificate by a CA or a cost accountant or any self declaration is also not required, means irrespective of the amount, in these 6 cases you are not required to submit any such declaration about principle of unjust enrichment. What are the 6 pointers? First one, when you are taking any refund of taxes which you have paid on exports, okay, means here you have done the export by on payment of taxes. So output tax plus the ITC which is there, if you are taking a refund of the same, no need to furnish any certificate. Same way, when you have done any exports without payment of tax, so unutilized ITC and plus unutilized ITC in case of inverted duty structure. Okay, then suppose if that one, invoice was not issued, you had received the advance but later you could not do the supply, then in such cases again you will be eligible for refund. No certificate, CA certificate etc. is required. Then section number 77, that is wrongful tax, wrong head tax collected and paid. On that also CA certificate, cost accountant certificate, not required. Okay, if you say that tax or interest is borne by the tax or interest is borne by such classes of persons which is notified by the government, then government will say that okay, CA certificate is not required. Or when you are claiming the excessive balance in electronic cash ledger, then also CA certificate or cost accountant certificate is not required. Okay, otherwise, other than these cases, if your refund amount is not less than 2 lakhs, okay, means it is more, then in such cases CA certificate or a cost accountant certificate will be required, certifying that principle of unjust enrichment is not applicable in such cases. Okay, along with this principle of unjust enrichment, etc., you were required to submit the documentary evidence. Okay, what documentary evidence you are required to submit, that is given in this rule number 89.2. Okay, it is given in this rule number 89.2. I am not taking up this in the revision because this is one time read. Okay, only 3 things I am going to take up here is export of services, export of goods, and the last point. Okay, otherwise normally, okay, whenever you are submitting any refund application, the supporting documents, okay, a statement which contains the details of invoice, not invoices, but it contains the details of your invoice number, invoice amount, and all those things will be submitted to the on the GST portal. Now, in case of export of services, they are telling that again, invoice number, date of the invoice, and, okay, important point, and the relevant bank realization certificate or foreign inward remittances certificate. Why this is extra required to be given here? Because you already know that in case of export of services, receiving the payment is very crucial. So please give a statement of the bank that, please give a certificate of the bank that you have received this particular payment. Okay, then similarly in export of goods, everything else is required, but BRC or FIRC is not required. That does not mean that you are not required to realize the money in export of goods. You have to realize the money. That is a different thing. But for filing the refund claim, submitting of BRC and FIRC is not mandatory. Right, rest all you can just read, it is one time read thing. Normal certificate, normal statements, etc., you have to attach. Okay, and the next one I want to do it with you specifically. Now here they are telling us that suppose if there was any agreement or contract between 2 persons. Okay, let's say a builder. Okay, a builder has, and we have entered into a contract with the builder that I am going to pay you 1 crore rupees and you have to provide me a house property. Okay, you have to sell me a flat. Now I have paid the amount to the builder. Builder says I have collected GST also, and builder says I have paid the GST to the government. Okay, now the builder says that I will not be able to complete this particular supply. Okay, I will not be able to give you the house property, etc. Then in such cases, if suppose the refund is being claimed by that unregistered person. Okay, if the consumer goes to the government and says that, sir, I have not got the supply and my tax is lying with you, I need a refund. Because when I went to the builder told that I will refund the amount back to you, but excluding GST, because GST I have already paid it to the government. Then consumer said that, don't worry, I will go to the government. Now, there are 2 possibilities in such cases. Suppose if the time limit for issuing the credit note is still left, means if the builder can still issue me the credit note, then I will take the credit note from the builder, where he can give me the refund value amount as refund, plus the taxes also he will give me as refund. Okay, in that case no need to go for the refund application. But suppose if the time period for issuing the credit note has expired, then any person, okay, either me or that builder can go and claim the refund from 2 years, okay, within a time period of 2 years from the relevant date. Now what is the relevant date here? Relevant date here is the date of cancellation of that contract, the day when that builder communicated it to me that we are not going to provide you the supply. From that day, within 2 years, the application can be done. And now if the consumer is going, then the consumer will have to take a temporary registration. Okay, he will have to take a temporary registration. And in this case, certificate of CA, etc. is totally not required. And this refund will be paid to that unregistered consumer. Are you clear with this, everyone? Yes. Okay, then going on to the 3C point. Okay, just now we completed about 3B point where we studied about time limit and all those things, procedures and time limit. Now going on to 3C. What is 3C talking about? 3C says about the further procedure. Now you have filed an refund application. Your refund application reaches to the GST department via common portal. And when you are claiming any refund from electronic cash ledger, immediately acknowledgement is generated, and that acknowledgement will contain a date. That is the date when you have submitted the refund claim. Okay, in other cases, when you are claiming the refund, then your application goes to the proper officer. Proper officer will take a time period of 15 days to check your application, and then an acknowledgement will be issued to you, which will contain a date of submitting of refund application. This date is very important, because this is the date when you have filed the refund application. Now, suppose when your application goes to the department, okay, and if the officer is of the opinion that there are some deficiencies and it tells you to file a fresh refund application, then can we say already some of my time is already wasted because I kept waiting for the reply of the proper officer? So they are telling that don't worry, while calculating that 2 years time period from the relevant date, the time period which you have wasted, okay, that is the date of filing the original refund claim till the date the deficiencies were communicated it to you. This is the time which got wasted. That much extra time will be available in that 2 years time period. Yes. Okay. Then after that, next point which is coming up here is withdrawal of refund claim. Suppose if you had made the refund application under RFD 01, GST RFD 01, and now if you are of the opinion that you wish to withdraw this refund claim, then anytime before you have received the sanction order, anytime before you have received the refund order, anytime before you have received the payment order, anytime before you have received the show cause notice, anytime before you have received any communication from the department, anytime before that, your application, by making an application for withdrawal, your refund application can be withdrawn. Okay, suppose if earlier when you had filed the refund claim, at that time if your electronic cash ledger or credit ledger was debited, okay, at the time of filing the refund claim, if the amount was debited, means it was removed from your electronic cash ledger or credit ledger, then now when you have withdrawn the refund application claim, means you don't want the refund, then that amount will be recredited back to your electronic cash ledger or credit ledger. Yes. Then going on to the next one, that is grant of provisional refund. Now, in case of zero rated supplies only, okay, only in case of zero rated supply, GST law permits that the refund, that the applicant can get the refund on provisional basis. That is 90% of the refund amount will be paid to you within 7 days. Okay, and balance 10% will be paid to you afterwards, means after doing all the due examination and all those things, then it will be paid to you. Okay, but if prosecution was going on against you during the last 5 years and the amount involved in that prosecution exceeds 2.5 crore, then provisional refund concept is not applicable to such a person. Okay, so provisional refund is applicable only in case of zero rated supply. Don't forget that. Once your refund is confirmed that you are going to get so and so amount of refund, then normally they say that refund amount is credited to consumer welfare fund. Okay, but there are some exceptional circumstances which we'll study ahead in the D point. Okay, in such cases, in those exceptional cases, the refund is given to the applicant. Otherwise, department does not trust the applicant and department says that we will credit the amount to consumer welfare fund. Okay, and then the department is going to prepare a refund order in which it will write, okay, in which it will write how much amount was provisionally refunded to you, if any. Okay, how much amount is adjusted against your outstanding tax liability and how much amount is now becoming refundable. A detailed refund order, okay, a detailed refund order will be prepared for your knowledge purpose. Right now, in what mode the refund will be given to you? So refund will be paid to you in the same mode in which you had made the payment to the government. Okay, suppose if your total output tax liability was 20 lakhs, for which you paid 4 lakhs by way of ITC, and for balance 16 lakhs you paid by electronic cash ledger. Okay, this was by using ITC and this was by way of cash ledger. Then in that case, now when you are applying for the refund, okay, 4 lakh will be credited in your electronic credit ledger and 16 lakhs will be credited in your electronic cash ledger. Okay, this is how the working happens. Okay, now listen. Now suppose if now you will, after reading the provisions etc., you will identify what if the refund is payable to the applicant. Okay, if it is payable to the applicant, well and good. First refund order will be made, then payment order will be made and the payment will be done to you. Okay, if the refund is not payable to the applicant, means the refund will be credited to the consumer welfare fund. Okay, now provisional refund, we studied that it will be paid within a time period of 7 days, but refund order normally Other than provisional cases, normally a refund is to be paid to you within a time period of 60 days from the date of you filing the refund claim. Okay, the day when I filed the refund claim, that date was mentioned in that acknowledgement. Okay, from that day, within a time period of 60 days, your amount of refund will be paid to you. If it is not paid, then we will study further that interest at the rate of 6% will be paid to you from the 61st day. Right? Okay, then going on to the next one, that is, suppose if you have filed the refund claim and if the proper officer is of the opinion that you are not eligible for that refund, or that refund is not admissible, etc., then the proper officer will issue a show cause notice on you, and it will tell you, please reply to this show cause notice within a time period of 15 days. Okay, then depending upon your reply that you have given to the officer, depending upon that reply, and after giving you a reasonable opportunity of being a final order, okay, either accepting the claim or rejecting the claim will be passed by the proper officer. Then in some cases, okay, in some cases, the proper officer or the commissioner, if they are of the opinion that refund is payable to you, but for some time we are required to hold that refund, okay, or for some time we are required to withhold that particular refund, then the proper officer or commissioner can pass an order for withholding your refund, and later if it is of the opinion that no, we can pay it, then it will release your refund. Are you clear with this? Okay, what are the two cases in which your refund can be withheld? Suppose if you have not filed the returns, okay, or suppose if you have not paid the taxes to the government, then in such cases it will withhold your payment of refund till the time you file the refunds or till the time you make the payment of the taxes. If you don't make the payment of the taxes, then those payment can be adjusted from your outstanding refund, right? That is one case when your refund can be withheld under section 5410. Okay, second case under section 5411, when they are withholding your refund. Okay, let's say there is a particular order which is already passed by the authority which shows that refund is payable to you, and now that order is subject matter of appeal. Okay, let's say department has itself filed an appeal against that particular order. So then the officer is of the opinion that because appeal is going on in this case, then it can so happen that this tax refundable can become tax payable. So let's withhold the refund till the time the appeal decision comes out. In that case, the refund can be withheld. But in this case, okay, suppose later on it is decided that no, the person is eligible for the refund, then in that case he will be paid the refund along with interest, right? Okay, then the next one, everyone, is suppose if assessee goes for an appeal and then if he gets the refund, he is eligible for a higher rate of interest at the rate of 9%. Okay, but when the department is, that we'll study ahead, but when the department is withholding the refund and later if it is given, then interest is payable at the rate of 6%. Right? Acha, suppose if earlier you had filed an application for refund, okay, and the amount got debited from your electronic cash ledger or credit ledger. Later, your refund got rejected. Later, your refund got withheld, etc. Then it will be recredited back to your electronic ledger. Are you clear with this? Okay, then going on to the next one, that is principle of unjust enrichment. Okay, principle of unjust enrichment basically means what? Under GST, they say that generally we pass on the burden of tax to the ultimate consumer. Okay, so ultimately, the person who is bearing the tax is the consumer. So why is the applicant claiming the refund of the same? Okay, so any applicant who is claiming the refund of any taxes should prove that he has borne that burden of the tax. It has not been passed on to some other person. That's why he is claiming the refund of the same. Are you clear with this? Okay, suppose if the concept of unjust enrichment is applicable, okay, means you are wrongfully claiming the refund, then the refund that will be paid by the department will be credited to the consumer welfare fund. But if there is no principle of unjust enrichment applicable, then the refund will be paid to that particular applicant. Okay, now these are the six cases when the concept of unjust enrichment is not applicable. Okay, concept of unjust enrichment is not applicable means I have not passed on the burden to anyone else, the applicant has not passed on the burden to anyone else, and that applicant is eligible for refund. Okay, and in these cases, amount will be refund amount will be given to that applicant and it will not be credited to consumer welfare fund. Okay, first four points are same. First 4 points are same as we had studied in the initial part of the chapter where CA certificate or a cost accountant declaration was not required. Next two different points here is that any other tax borne by such actually F point is also same. Okay, the tax or interest borne by such applicants as may be notified by the government. And the E point, one point which is different here is the tax or interest which is paid by the applicant if the burden is not passed on to any other person. If the burden is not passed to any other person, then definitely this person will come under the exceptions of unjust enrichment. Okay, otherwise normally export done on payment of duty, export done without payment of duty, supply later on cancelled but advance was collected from the customer and tax was paid to the government, or tax under section 77, that is tax wrongly collected and paid. In such 6 cases, if we are going and applying for any refund, then that refund will be directly paid to the applicant. Are you clear with this? Okay, then going on to the most important part of the chapter, that is point E, which talks about refund of unutilized ITC. Okay, now we know that unutilized ITC means you have got some accumulated ITC with you. When will that ITC get accumulated? In 2 cases it will get accumulated. Suppose if you are doing any zero rated supply without payment of tax, means there is no output tax. You are doing it under bond or LUT, there is no output tax, but input has got accumulated. That is one case. Okay, and second case is in case of inverted duty structure, that is when my output tax is less than the input tax. In these 2 cases, can we say my ITC will be more? So that ITC refund you can get under section number 54(3). But one thing is there, in case of inverted duty structure, there are some exceptions. Government has notified some products which you need not remember. Okay, government has notified some products on which you will not get the refund of unutilized ITC in case of inverted duty structure. Okay, so in these 2 cases, zero rated supply, and in case of inverted duty structure, whatever is your unutilized ITC, for that you can claim the refund. Again, go within a time period of 2 years from the relevant date, same time period. Go and submit form number GST RFD 01. Okay, and in such cases, since these were covered under exceptions to unjust enrichment, this amount will not be credited to consumer welfare fund, whereas it will be paid to the applicant itself. Are you clear with this? Okay, now here we are supposed to do 4 rules. Okay, everyone full on attention. Okay, full on attention. We are supposed to do 4 rules here. Rule number 89.4, 89.4a, 89.4b and 89.5. Okay, these are the 4 rules. These are the 4 rules under which refund can be claimed under this particular point. Let's try to understand here. First one, 89.4. 89.4 talks about zero rated supply. Okay, zero rated supply where we have done the exports without payment of taxes on bond or LUT. So you will be having some inputs of goods and services. So you will get the refund of that inputs as well as ITC of input services also. Okay, capital goods ITC will not be available, only inputs and input services will be allowed. Okay, but there is a formula. There is a formula of refund that will be eligible for you. Refund amount is equal to turnover of zero rated supply of goods and turnover of zero rated supply of services. Means whatever you have exported goods plus whatever you have exported services, that turnover will be total. Means can we say in the numerator we have got the export turnover divided by adjusted total turnover. Okay, adjusted total turnover. So can we say by doing this we will get the proportion of exports that we have done. Okay, that proportion will be applied on your net ITC. Here net ITC will be of inputs as well as input services. Okay, so this much amount. Suppose if I am doing 100% export, so 100% credit I will get. Okay, suppose if my export promotion is only 80% out of total, so 80% of the inputs refund I am eligible under rule number 89, sub rule number 4. Are you understanding this? Okay, now let's see these terms, everyone. Refund of amount is the amount of refund that is admissible to you. Okay, net ITC, I told you 2 things will be coming up here. One will be in ITC of inputs and the other one will be ITC on input services. But excluding that ITC for which refund will be availed under 2 other sub rules. Okay, which we will study 89.4a and 89.4b, that is totally different. So just subtract that ITC from here because that will be anyway claimed separately. Okay, then something important, everyone here. What do you mean by turnover of zero rated supply of goods? Zero rated supply of goods means, can we say it is talking about those goods which I have exported? Okay, so how much value will you take for that? So they are telling that whatever value, whatever was the actual export value. Ma'am, what do you mean by actual export value? The value which you had mentioned in your FOB or shipping bill. Okay, FOB value mentioned in the shipping bill or invoice value, whichever is lower. Okay, FOB value or invoice value, whichever is lower. It is written here in the explanation. Free on board value, okay, which is declared in the shipping bill, or the value declared in the tax invoice, whichever is lower. That is your actual export value. Okay, such value or 1.5 times of the value if the same goods are sold in the domestic market. Okay, out of these two, whichever is lower. Again, I will tell you what is the export value of goods. Actual export value of goods. I'm not talking about services till now. Okay, only goods. Actual export value or 1.5 times of the selling price in domestic market, whichever is lower, that will be considered as your export value of goods. Are you clear with this? Okay. Similarly, what will be the value of services? Okay, so for services they have given a very good value. Now, do you all remember that in case of export of services, receiving the payment is very, very crucial. Okay, receiving the payment. So see how they are calculating the turnover of export services turnover. So they are telling, first of all, for whichever period you are claiming this refund, see how much amount of payment was actually received. Okay, how much amount of payment was actually received during that period. Okay, then add such amount for which payment, the supply of services got completed during this period. Supply of that service got completed during this period, but payment was received well in advance. Okay, so add that amount of services for which the supply got completed now, for which the payment was already received. Okay, so account it in your turnover now. So can we say same thing would have happened earlier also? Okay, so just subtract that much value of services for which payment is already received here. Okay, for which the payment is already received here, but the supply is not yet completed. Okay, here the supply got completed, here the supply is not yet completed, so please don't include it in the turnover of export of services. Okay, so basically only what will be covered here, only that much amount of turnover will be included for which the payment is also received and supply is also done. Take only that much amount in this zero rated supply of services. Are you clear with this? So these are two special points in which we calculated in which we saw how to calculate the turnover of export of goods and how to calculate the turnover of export of services. Are you clear with this? Then your denominator is your adjusted total turnover. Now, adjusted total turnover is actually your total turnover, but see how they are calculating it. It means the total of the value of turnover in a state or union territory as we have been studying. So normal turnover, but excluding the turnover of services. So basically first they told total turnover. Now they are telling subtract services from here. Okay, so means we know here we have to take turnover of goods only. Okay, here we have to take the turnover of goods and then plus turnover of zero rated supply of services as calculated in D. Okay, so basically export of services, special value which we just now calculated above, this is export value plus other services which are non-exported. Okay, so can we say in B point we have taken all the services, and while taking the service value of export, please take the special value. Okay, similarly, when here you are taking turnover of goods, from that when you are taking for export, please take the special export value. Okay, please take the special export value. Are you understanding? Okay, if you want, I can again tell you, everyone here. I want some free space. Here. Now, let's say when you are calculating your adjusted total turnover is going to be my total turnover. Okay, but before that, exempt supplies you have to totally exclude, because anyway ITC credit is not available on that, and the turnover of supplies on which refund is claimed under sub rule 89.4A and 89.4B. For that, anyway, separate calculation is there, so exclude it from the total turnover. Okay, so here they are telling that take total turnover. Okay, total turnover will be taken of goods and services. Okay, in goods and services, you will have export and others. In services also, you are going to have export and others. Okay, when you are taking it for export of goods, take the special value, that is the actual export value or 1.5 times of the domestic turnover, whichever is lower, take the special value. For others, when you are taking, take the normal value. Okay, for services, when you are taking the export value, take the special value. Okay, that plus minus. And when you are taking for normal services, domestic services, supply of services, then take the normal value. Basically, see, can we say my adjusted total turnover is my denominator? So whatever value of export you are taking in your numerator, same value should be reflected in your denominator also, then only it will be done proportionately, right? Okay, and from this total turnover, just exclude the exempt supplies. Are you clear with this? Okay, so now whatever is your export turnover divided by your adjusted total turnover, you will get your export proportion. Example, 80%, 90%, 100%. Apply that on the net ITC. Ma'am, what do you mean by net ITC here? Net ITC is ITC of inputs and input services. Are you clear with this, everyone? Yes, so all these things are written here and there is an example also given for that particular purpose. And with this, our rule number 89.4, okay, rule number 89.4 gets over. Now going on to the next one, that is rule number 89.4A. Now 89.4A is the refund which is available to the supplier who has taken the benefit of deemed exports. Okay, who has taken the benefit of deemed export means I have provided it to someone who is going to further export it, means I have not done actually an export but it is considered as deemed export, so I will get the refund of the same, both input as well as input services. Okay, and in this one the benefit will be available to the person who is further going to do the exports. Example, Arpita has supplied it to X and X has supplied it to USA. Okay, in 89.4A refund was available to Arpita. Okay, in 89.4A, refund was available to Arpita for the inputs which she had purchased. Okay, whereas in rule number 89.4B, benefit will be available to X. Okay, benefit will be available to X who is going to actually export it further by taking the benefit of advance authorization, EPCG, EOU, etc. So, in 89.4B, benefit will be available to Mr. X. Okay, so refund of input and input services will be available to X in this case, and refund of input and input services will be available to A in 89.4A. Are you clear with this? Okay, then going on to the last rule. Okay, then the biggest part of the chapter will be completed here. Just try to understand. Okay, rule number 89.5 talks about refund in case of inverted duty structure. Okay, first let's understand about inverted duty structure, then we'll go to this particular formula. Okay, now normally what happens is, let's say I'm exporting this particular AC, I'm manufacturing this and I'm exporting it to the other country. Okay, then in that case, suppose if I'm purchasing plastic for this, circuit for this, and that input is coming at the rate of 18%. Okay, let's say any one of the input is coming at the rate of 18%, but my output is going at the rate, final AC remote is going at the rate of 5%, means outward of this is taxable at the rate of 5%, means can we say at least one of my input is more than my outward rate, then this will be considered as inverted rated supply. Okay, because here my ITC will be more ITC will get accumulated, so I can get a refund of the same under rule number 89.5. Okay, similarly, one more special thing was notified by the government. Do you recollect? Let's say I am a manufacturer, okay, and I give it to the exporter, and exporter is going to export it outside the country. Then in such a case, do you recollect from this manufacturer point of view, he was supplying at 0.1% IGST or 0.05 plus 0.05 in CGST and SGST. His inputs were taxable at higher rates, but he was giving a supply at 0.1%. So this was considered as inverted duty structure only. If it was considered as inverted rated structure, etc., then refund of this will be available to the manufacturer under rule number 89.5. Are you clear with this? Okay. So this refund we are going to study. in rule number 89.5. And one very important thing that we need to understand here is, in rule number 89.5, you will get the refund only of inputs. Okay, no refund of input services, no refund of capital goods also. In all the three rules earlier, inputs as well as input services refund was available. Okay, but here only refunds of inputs will be available. Okay, let's say I am engaged into trading of some goods. Okay, I purchased this AC remote. I purchased this at 18% GST. Okay, now when I'm supplying it to the government, normally it was also taxable at the rate of 18% because same goods. Okay, later now so that is not considered as inverted duty. Later what happened, I purchased this at 18%. Now I have this available with me. Now the government has reduced the tax rate on this particular product. Government says now this product will be taxable at the rate of 12%. So now I go and sell it. At the time of selling it, I am taxing it at the rate of 12%. Will this be considered as inverted duty? Answer is no. Okay, because here at different point of times you are comparing the two rates. So this will not be considered as inverted duty structure. Yes. Okay. Now listen, how much amount of refund is eligible for you? Okay. How much amount of refund is eligible for you? I will give you two types of example, one simple example and one difficult example. Let me see if I have the notes there with me of which I had taken it during the lecture. Everyone here. Yes. I have written it here. Everyone, can you see this? Okay, now this is a simple example. Let's say I am dealing into some goods. Okay, I am dealing into some goods. I am manufacturing some goods. For that, I have purchased some inputs. Okay, for that, I have purchased some inputs at the rate of 18%. But that particular finished goods, when I am selling it, it is going at the rate of 12%. Can we say this comes under inverted duty structure? Yes. Okay, now when I purchased the raw materials, ITC was, let's say, 20 lakhs. Okay, and when I'm selling the goods, let's say output tax payable is equal to 18 lakhs, for example. Okay, then in this case, since I'm dealing only in one category of goods, which is coming under inverted duty structure, and since this is talking only about inputs and not input services and not capital goods, so what will I do? My tax payable is equal to 18 lakhs output tax payable. For that, I will utilize this ITC of 20 lakhs. Okay, how much amount of ITC is still left with me? 2 lakh rupees is the unutilized ITC left with me. I will take a refund of that under rule number 89.5. Simple case, everyone. Simple, manageable till here. Okay, now let's go to a difficult example. Okay, what is happening in this particular case? Now here they are telling that, let's say you are dealing in one goods only. Okay, let's say you are dealing in one particular goods, and for manufacturing of that particular goods, your input credit is equal to 20 lakhs. Okay, and your credit of input services, वैसे you know that credit of input services, refund of input services is not available. Okay, but you have utilized some input services while manufacturing this output product. Okay, so input services is equal to 10 lakhs. You know total amount is equal to 30 lakhs. Okay, total ITC is 30 lakhs. Now when you're, and again this is also a case of inverted duty structure, that is inputs is more, rate of input is more, rate of output is less. And then you come to know that your tax payable on outward supply is equal to 15 lakhs. Okay, so now what will you do? Okay, you as an assessee, what will you tell to the government that, okay, output tax payable is equal to 15 lakhs. Sir, for paying this 15 lakhs, I will utilize input services credit of 5 lakhs first. Government asked me why? Sir, because I am under inverted duty and credit of input services is not available. So I will first utilize it and then I will take the refund of input. Government was like, oh my God, she's smart. Okay, so government told that, no, first use the inputs. I said, sir, this is unfair. Then we referred the GST law. GST law said that whenever you have got inputs as well as input services with you, and when you want to utilize it for payment of output tax, please utilize it proportionately. Okay, please utilize it proportionately. Means, how much will I pay from my inputs? In the ratio of 20 by 30 lakhs. And how much will I utilize from my input services? 10 lakhs by 30 lakhs. Means in the ratio of, can we say 2:1? In the ratio of 2:1, 20 lakh is to 10 lakh, 2:1. In this ratio, I am going to utilize my credit. Okay, and only then the balance amount of inputs will be allowed to me as refund. Okay, now can I solve it further, everyone? Yes. Now listen, my output tax is equal to 15 lakhs. Okay, this is payable. For that, I will use these two for making the payment. Okay, now I want 15 lakhs amount. I want to pay 15 lakhs of amount. Now, for this, I will use this some amount from 20 lakhs, some amount from 10 lakhs in the ratio of 2:1. So, this 15 lakhs will be divided in the ratio of 2:1. So, that will give me 10 lakhs and 5 lakhs. So, 10 lakhs I will use from this input and 5 lakhs I will use from this input services, and this way my output tax liability is paid. Now, can we say from this input I utilize 10 lakhs. Left out amount is how much? Left out amount is balance 10 lakhs, for which I can claim the refund under rule number 89.5. Ma'am, what about input services? That refund is anyway not eligible under rule number 89.5. Are you clear with this, everyone? Did you understand this? Okay, so I had my input of 20 lakhs. Okay, from this 20 lakhs, I had my input of 20 lakhs. From this 20 lakhs, I paid some proportionate liability. Okay, from this inputs, I paid some proportionate liability, and only balance amount can be taken by me as a refund. Did you understand this, everyone? Okay, this was simple method of solving a difficult example. Okay, now see the formula that they have given. Everyone with me. See the formula. Where is it? Here it is. Now see what are they telling. I want you to simplify it for me. Okay, now turnover of inverted supply. Okay, whatever is your turnover of inverted supply means the turnover on which output tax rate is less. Okay, that turnover divided by adjusted total turnover means, can we say we will get the proportion of inverted sales? Okay, that turnover multiplied by net ITC. Okay, now here can we say net ITC will only be of inputs. Okay, so just like I have told in my main lectures also and fast track lectures also, whenever you are solving this particular question, always write here for inverted duty structure, wherever you are getting net ITC, write there net ITC of inputs. Okay, so can we say you will get the proportion of inverted duty structure here? Okay, you will get the proportion of inverted duty structure multiplied by net ITC of inputs, means this is that ITC of inputs which is eligible on inverted duty structure. Okay, so alternatively we can also call it as net ITC of inputs of inverted duty structure, right? This is the amount of refund that you will be available, first eligible. Okay, then from that, can we say you will utilize it for payment of some outward tax liability of inverted duty structure? See, how much amount of tax are you going to pay? Tax payable on such inverted duty structure. Just like in our example, 15 lakhs was payable. Okay, multiplied by, can we say for paying this outward tax liability, you were using inputs and input services proportionately. Okay, 20 lakhs by 30 lakhs or 10 lakhs by 30 lakhs. So, net ITC of inputs divided by ITC of input and input services. So, in whatever proportion you utilize that ITC, that amount will be paid. And now, whatever amount is left, okay, whatever amount is left, that will be available for you as refund. Okay, now this formula I have put it here also, everyone. Okay, and we'll get the same answer also, everyone here. Inverted turnover upon adjusted total turnover. Now, in our example, all the turnover was inverted turnover. So, I am taking the percentage as 100% multiplied by net ITC of input. How much was my ITC of input? My ITC of input was 20 lakhs. So, I took it as 20 lakhs. So, this ITC pertains to my inverted business. Yes, minus. How much was my tax payable? Tax payable was 15 lakhs. In what ratio did I use the input ITC? In the ratio of 20 by 30. That is net, that is net ITC of input divided by total ITC. That is 20 divided by 30. If you do this calculation, you will get the answer as 10 lakhs, which is the same 10 lakhs which we had got earlier. Okay, in the question bank, there are many questions on this. Please give it a try. So this was, and yes, net ITC under rule number 89.5 is going to talk about only ITC on inputs, not even input services. Okay, when we were doing 89.4, 4A, 4B, we were getting the credit of ITC of inputs as well as input services. Adjusted total turnover, relevant period definition, everything will remain the same. Okay. This is what we had discussed. Now going on to the next few pointers. Now here they are telling that you will be eligible to take the refund of ITC. Okay, only if that ITC is reflected in your GSTR 2B. Okay, if it is not reflected in your GSTR 2B, then you cannot claim the refund at all. Logic. Okay, but in three cases the credit is not visible in our GSTR 2B. One is in case of reverse charge, because we pay and we take the credit. Okay, next one, input service distributor, and third one in case of taxes paid on imports. On that also what do we say, the amount is not reflected in the GSTR 2B. We are paying it to the government na. So who will put it in our GSTR 2B? No one. So except for these three cases, if your credit is not reflected in your GSTR 2B, then you will not be eligible for refund. Yes. Okay. Then after that, next very important point, everyone here, here they are telling us that suppose if you have got some unutilized ITC, just like we studied now in our zero rated supply. Okay, in our zero rated supply and in case of your inverted duty structure, in these two cases we just now claimed the refund of unutilized ITC as per section number 54(3). So they are telling that whatever refund I have calculated as per the formula, okay, that will be restricted to some amount. Ma'am, will it be further restricted? Yes, it will be restricted to what amount? First, it will be lower of 3 figures. Okay, which 3 figures? One is the amount calculated as per the formula, or the amount which is reflected in your electronic credit ledger. After filing GSTR 3B of that relevant period. Okay, let's say I am claiming refund for April 2023. Okay, when did I file the GSTR 3B for April 2023? After filing GSTR 3B, what was the balance in electronic credit ledger? That amount, or the balance available in the electronic credit ledger at the time of filing the refund application. At the time of now, when you're going and filing the refund application, whatever balance is available in your electronic credit ledger, whichever is lower, this is the actual amount of refund which will be disbursed to you. Okay, even if as per the formula you are maybe eligible for 2 lakhs of refund, but when you filed the GSTR 3B of that period, at that time the balance in your electronic credit ledger was, let's say, 1.90 lakhs, and now when you file the refund application, at that time the balance in your electronic credit ledger is only 1.80 lakhs, then you will be eligible only for 1.80 lakhs, because they are going to debit that amount from your credit ledger. Okay, so if your credit ledger has only 1.80, then they cannot debit 2 lakhs from that. Are you clear with this? So the amount of refund will be restricted to this. Okay, this is applicable for rule number 89.4 and rule number 89.5. That is in case of zero rated and in case of inverted duty structure. And whenever they are debiting, okay, whenever they are debiting this amount from your electronic credit ledger, first they will debit the amount from IGST. Okay, then whatever is the balance amount which is yet to be debited, that will be debited half from CGST and SGST. Okay, if sufficient amount is not available in any ledger, suppose if less amount is available in CGST, then debit it from SGST. Are you clear with this? And yes, there are two cases when refund of unutilized ITC is not allowed. One is very important for solving the questions. Okay, one is when the goods are subjected to export duty, means taxes payable on exports. That is when the government does not want to promote export of such goods, it will levy export duty. When you are paying export duty, at that time you will not get the refund of the unutilized ITC. That is one thing. And second thing, suppose if you have claimed the drawback of CGST or IGST, if you have claimed the drawback, customs drawback under customs of CGST or IGST, in that case refund of ITC will not be available to you. Okay, and whenever you are claiming any refund, minimum amount of refund claim under each head of tax should be at least 1,000. If it is less than 1,000, refund application is not applicable, except when you are claiming any amount from the electronic cash ledger. For cash ledger, that is your money, so whatever is even if it is 5 rupees, you will get the refund of the same. Example. Okay, now going on to the last part of the chapter, that is in case of goods or services exported outside India under bond or LUT. Okay, now under bond or LUT or after payment of taxes, these are the two ways in which the export of goods and export of services can be done. Are you clear with this? Yes. Now listen. First case, when you are exporting any goods with payment of tax. So can we say whatever IGST you have paid at the time of export plus the ITC that is available, you will be eligible for the refund of the same. For that, you need not file RFD 01. Shipping bill itself is sufficient, which we had studied earlier. Plus, the person in charge of your vessel, vehicle, etc., that person will have to file a departure manifest that the goods are leaving into India, the goods have been exported from India. So your shipping bill plus this particular manifest plus the supplies which you have shown in GSTR 3B, all these will be matched, okay, proving that yes, the goods have been exported from India. Aadhaar authentication will be done, GSTR 1 will be checked, and then there is a communication between the GST portal and between the customs portal that will be connected. Sharing of information will be done. When the authorities are satisfied that yes, goods have been exported, at that time whatever IGST you have paid, that amount will be credited to your bank account. Are you clear with this? Okay. Now suppose in three cases, this refund can be withheld. Okay, we had studied about withholding under 5410 and 5411. That was not for exports. Okay. Now here there are three circumstances in which your refund on exports can be withheld. Suppose if this officer is receiving any request under section 5410 or 5411, means central officer or state officer, UTGST officer, etc., they are making a request to this IGST officer that sir, please withhold his refund. In that case, it can be withheld. Okay, second one, when the customs officer says that this exports were done in violation, then your refund can be withheld. Or when the CBIC intervenes in between and says that we need to check some things, then in that case, the refund of IGST can be withheld. Are you clear with this? Okay. Then in some cases, they are telling that whenever you are exporting some goods to government of Bhutan, okay, at that time we collect the taxes from government of Bhutan. Normally it is not allowed, but in some specified cases we collect the taxes from government of Bhutan. So in that case, when we are refunding the taxes back to government of Bhutan on exports done to them, okay, later if we are exporting the later if we are refunding the taxes to the government of Bhutan, if we have refunded the taxes back to the other country's government, then in that case refund of then in such case the exporter will not be paid any refund of IGST. Okay, because the government is not having the taxes have been already paid to the government of Bhutan by way of a refund. Are you clear with this? Yes. Then a small clarification which is coming up here. What is the clarification? Everyone here. The clarification is, suppose if you have taken any goods outside India, let's say for the purpose of exhibition, etc., we had studied in the last session also, it is not at all considered as a supply. If it is not considered as a supply, it will not be considered as a zero rated supply also. Okay, so at that time there will be no payment of taxes, nothing will apply. Okay, but if suppose, what if the goods are sold subsequently? Okay, if the goods are sold subsequently, then we will have to prepare a tax invoice. Okay, or if it is not sold and not even brought back to India within a period of next 6 months, then we will have to prepare a tax invoice for the same. Okay, now suppose whatever goods you have sold in the next 6 months, okay, whatever goods you have sold, on that will you get the export benefits? Definitely yes. Okay, definitely yes, because now you are preparing the tax invoice for export. If you are preparing the tax invoice on export, so whatever is the proportionate ITC available, okay, of that you will get the refund of the same. Then the next point which is coming up here is talking about export of services. Normal, when you are exporting any services, you are required to file the refund of that refund application under form GST RFD 01 for all the services which are exported outside India. Okay, now in three cases they are telling you that we will give you refund of ITC only when you are doing the export on a bond or LUT, that is the export is done without payment of IGST. Okay, one is, do you recollect in case of merchant exports we had studied that whenever the exporter is exporting the goods outside India, when he was receiving his input at 0.1%, we will give him the refund of that 0.1% provided he is doing that export only on bond or LUT. Okay, similarly, suppose if someone has taken the benefit, someone is doing the exports when he had received the benefit of deemed exports. Okay, means I had given it to X was an EOU and that particular person is required to supply the goods ahead. If that particular person is supplying the goods ahead on bond or LUT, Okay, then in such cases, refund of ITC will be available. But refund of ITC will not be available if he is doing the export on payment of IGST. Yes. Then after that, the next one, rule number 96A and rule number 96B we have already covered in the previous chapter. I will just revise it once for you. Suppose if you are exporting any goods or services under bond or LUT, that is without payment of IGST, then whatever is your unutilized IGST, you can take a refund of the same. Okay, now in that there is a clarification. I don't know if you recollect, in case of export of services, realization of payment is very important. So suppose if it is not realized within 1 year from the date of issue of invoice, then within the next 15 days we have to pay the taxes to the government along with interest. Do you recollect? And in case of goods, if the goods are not exported within 3 months from the date of issue of invoice, then within the next 15 days we have to pay the taxes to the government along with interest. Okay, now suppose let's say I have paid that IGST plus interest to the government voluntarily. Government did not ask, but I could not do the export within 3 months or could not realize the money within 1 month. So I voluntarily paid the IGST on those exported goods or exported services to the government along with interest. Now they are telling that what if in future we are able to export the goods, or what if in future we receive that export consideration on services from the other country, then in that case whatever is your unutilized ITC, now even if it is late, but at least the export is done. If the export is done, so whatever was your unutilized ITC, you will be able to get the credit of the same. And what about this IGST? This IGST will also be refunded back to you, but don't ask for this interest. Okay, interest we are not going to pay it to the government. That was the new clarification which was inserted. If you want, I will just repeat it. Okay, suppose if the export of goods happened late, that is after 3 months, or if payment of services was realized later after 1 year, etc., and I had already voluntarily paid some taxes on that to the government, so those taxes will be refunded back to you, but the interest which you had paid to the government, that will not be refunded back to you. Okay, similarly when you are exporting any goods to the other country, okay, in that case suppose if you are not able to realize the consideration as per the FEMA time limits, okay, then if you are not able to realize as per FEMA time limits, then within the next 30 days you are required to do what? You are required to pay the deposit. Suppose if in the meanwhile you had taken the refund of inputs, then you will have to pay it back to the government along with interest. But later, if you late realize it, you can again get the refund of that unutilized ITC. Okay, Acha, in such cases, if suppose RBI says that okay, we will write off, means even if you don't realize that money from the other country, that's okay, then no need to pay the taxes to the government, taxes to the government, and whatever amount of ITC has been refunded to you will not be recovered back from you. Okay, and later, suppose if later you realize that money from the other country on export of goods, okay, let's say after a period, whatever is the FEMA time period, after that if you realize that money, okay, then in that case, if your refund was taken back by the government, then it will be paid back to you, right? And then going on to the last parts of the chapter, section number 77, we have already studied about it. Suppose if I have collected tax from some particular person under wrong head and paid to the government also under the wrong head, then government says no problem, pay the tax under correct head, then take the refund of the taxes wrongly paid. Okay, this refund application will be done within a time period of 2 years from the date of correct payment of tax. Whenever you have made the correct payment of tax, from that day within 2 years, go and apply for the refund. We will not charge any interest from you for this wrong payment, etc., because anyway tax was paid to the government. Okay, then going on to section number 55. Oh, so here finally your section 54 comes to an end. Okay, now going on to section number 55, which talks about refund to UN bodies, embassies, etc. So UN bodies and embassies, as we had already studied, they are not required to file this GST RFD 01. Okay, they have to file some other form in the prescribed manner, and they can claim the refund on quarterly basis. Okay, so basically for whichever quarter they want to claim the refund, from the end of that quarter within a time period of 2 years, they can go and file this refund application. All this UN agencies, embassies, consulates, and all these people can go and make an application for claiming the refund. Okay, it can be done within a time period of 2 years from the end of that respective quarter, and they will submit the refund application form, plus they will submit the statement of their inward supplies. Okay, whatever means, can we say when we had supplied some goods to UN, etc., we would have charged tax from them, which is inward supply for them. So they will give a statement that this was our purchases and this is the amount of tax that we have paid, and we are claiming a refund of the same. As soon as their application is submitted, acknowledgement is generated and the refund is paid to them. Are you clear with this? Okay, these are the major points that you need to remember from this UN section. Then going on to the next section, section number 56, which is important. Now, we had already studied that refund is to be paid within a time period of 60 days. If there is a delay beyond 60 days from the date of making the application for refund application, then from the 61st day, department is required to pay us interest at the rate of 6% per annum. Simple interest at the rate of 6% per annum till the time the refund is paid to you. Okay, but now, acha, B point is super duper important. Okay, suppose if there is some order which is passed by adjudicating authority, appellate tribunal or court, and it was decided in that particular order that refund is due to the assessee. Okay, then again, whenever such an order is received, we are required to file a refund application. Okay, we'll go and file a refund application on the basis of that order, and if that amount is not refunded to you within 60 days also, okay, means you were correct and the department was wrong, that's why you won the appeal. Okay, now if you have won the appeal, you should get the refund within a time period of 60 days of the refund application. If they are not giving you the refund within a time period of 60 days, then they will give you interest at the rate of 9% per annum instead of 6% per annum after the expiry of those 60 days. Are you clear with this? And this refund order will include everything. How much amount of refund is payable, what is the delay period, how much is the interest that will be payable. Then going on to the next section, that is section number 57 and 58, which talks about Consumer Welfare Fund. Okay, Consumer Welfare Fund talks about what? Consumer Welfare Fund says that whenever the principle of unjust enrichment is not applicable, at that time refund will be paid to the applicant. Otherwise, by default, in all the cases, the amount will go to the Consumer Welfare Fund. That is, if you have not borne the burden of the tax, why are you taking the refund? Okay, let's give it to the consumers. Okay, so Consumer Welfare Fund is formed in which all the monies are deposited. That money gets accreted because of investment interest, etc. Even that amount goes to the Consumer Welfare Fund. And if suppose in any order, etc., it is determined that applicant should be paid some refund out of Consumer Welfare Fund, so amount will be paid out of this Consumer Welfare Fund. This will be managed by the government only, and government will appoint a standing committee who will see how to manage the funds of this Consumer Welfare Fund. Are you clear till here? Yes. And then the next one is talking about, last one is section number 15, which says that in case of tourist who is living outside India, when he was in India, we charged him IGST. So when he is leaving India, he can take because ultimately this is just like your export only. So the taxes should not be exported to the other country. That's why before leaving India, he can claim the refund of the IGST which he has paid here in India. Are you clear with this? Yes. And the last one, that is your circulars, which I had already mentioned earlier. Still, I will mention it again, everyone. Now, let's say, suppose if you have received any advance from, whenever any advance is received by any supplier from the customer, okay, and then subsequently this contract got cancelled and the invoice was also issued for this. Okay, see, if the invoice was not issued, then refund of that was allowed to be claimed under a specific point. Okay, remember before that section 77 point, that point was getting repeated. But here, if the invoice have already been issued, then they are telling that what can the supplier do is, supplier can issue a credit note for the same, and it can refund the entire amount to the consumer along with taxes, and whatever is the amount of ITC which we have got, that the supplier has got, that can be used for paying his output tax liability. But if he does not have any output tax liability for using this credit note, then he can claim the refund under that last point, excess payment of tax, miscellaneous point, by using this form GST RFD 01. Okay, these three are similar points. Okay, these three are similar points. Here what happened, the supplier has issued the invoice before the supply. Okay, in this point, the supplier has issued the receipt voucher. Then again, we are giving him the same opinion, and here here, what if the goods are returned? Goods are supplied by the supplier under the cover of tax invoice, and then the goods are returned by the recipient. Then again go by the credit note option, and by credit note option we will get the credit of the same. We will refund it back to the we will refund it back to the customer also. Yes, and we can take the credit of, we can take a refund of the same from the government of the taxes which were already paid. Are you clear with this? This is all about your refunds chapter. I hope this was clear to you. Yes, please read the chapter again and you will be through.